Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Morning.
Morning.
We just threw one day yesterday. It almost feels like we've been through the week, right?
And it's the last day before the budget, right?
Absolutely.
I don't know about you guys, but I mean, despite covering the budget for over a decade now, every single time, you know, there's this adrenaline rush, there are goosebumps, you don't know what to expect. It's the biggest day of the financial calendar. So, yeah, I mean, it's pumping this time, I guess.
Well, that's right, Sonia. I think it'll only pick up from today because in the last few days, you know, the markets have been, the attention has been deviated to a couple of other issues, you know, whether it's with regard to the Adani Group or what the Fed's going to do. So let's see what the finance minister comes up with.
And apparently, it's going to be a long speech. It's going to be a long budget.
It was pretty long last time. I don't know. Is it going to be longer this time?
I don't know. That's the buzz. Anyway, let's quickly get the ball rolling and tell you what to kind of watch out for. Now, global cues, which have been doing very well and have been very supportive, we've seen a bit of pullback there yesterday. I mean, that's the NASDAQ for you, down about 2% or so. The Dow pulled back, the S&P 500 was down a little lesser, but the NASDAQ is where the bulk of the pressure came from. It's not exactly bad, and I'll tell you why, because, you know, the Fed has explicitly said that markets rallying is loosening of financial conditions which they don't want. And markets and financial conditions have been very, very loose for some time now, all through 2023 in the US with what the market has done. So, you know, you want the market to go in with some humbleness, some humility into the Fed and perhaps come out unscathed on the other side of the Fed meeting. But I'll come to that a little later. So global cues, not all that supportive this morning. I mean, that's point number one. We saw a late recovery in the Nifty yesterday, and that kind of gives us another chance that that 17,550 level could be defended. It broke intraday, but we closed above it by about 100 points or so. The 200 sort of exponential moving average is around the 17,550 mark. And there is also an important retracement, which we've been highlighting. The 61.8% retracement of the entire rise from the September lows to the all-time high. So there is a cluster of supports. Let's hope that this is defended. If not, the two other levels which come into play is yesterday's low, which is 17,405. And post that, you know, the retracement support comes in at the next retracement support, which is 78.6 of that same rally, which is 17,205. As I said, let's hope, you know, both yesterday's lows and 17,550, which is above that, those levels are held and we don't talk about further retracements. On the way up, as we've been saying, 17,761 is a bit of a resistance. It's not very far away. With the kind of moves we've had intraday, anything is possible. Now, the Adani FPO closes today. The Adani Enterprises FPO closes today. And I think that is, at least from a very near-term perspective, the key to investor confidence. Yesterday, we had an entity from the Middle East committing a large sum of money towards the FPO, but more needs to get done. And I think by today evening, post-market hours, we will get a sense of how this one is going. The reason I'm mentioning this is because it's, of course, important for that group of stocks. But what I'm focused on is banks. Because, you know, banks have had an inordinate amount of fall over the last 3-4 days on the back of this particular issue. The bank Nifty, for example, is down 6.2% from the highs 3 days back to yesterday's close, not even yesterday's low. That would be some 7.5%. And of course, individual stocks as a consequence have pulled back quite a bit. SBI, for example, right? I mean, people would have bought it above 600 after the results. Stocks down to whatever, 540, 550, and so many others which have come off very, very sharply. So, you know, if the FPO gets subscribed, gets done, we can talk about what happens to those individual stocks, but I think banks should be relieved, and I think this is the pocket where perhaps one could look for opportunities from here out. So that's banks. In terms of levels on the Bank Nifty, the retracement support for the Bank Nifty stands at 39,970, and yesterday's low is 39,420. So those are levels which the market closed above after the pullback like the Nifty, and I think the Nifty Bank should hold those levels as well. We've got the Union Budget tomorrow. We've got the Fed decision later in the evening tomorrow. So these are big cues in that sense which are lined up. In a way, the to look at the silver lining, not a good thing, of course, but the silver lining, if you want to find one, is that the market is going into the budget in a very, very weak fashion. So expectations from the budget also are very low, and expectations from the market are also very low. And that is not exactly a bad setup if you're hoping that levels hold and maybe the market bounces back a little bit from here.
It reminds me of that discussion we had at Editors Roundtable, right? Where the conclusion was that from the markets and your marriage, you should always keep your expectations low.
Always.
So you will never be disappointed.
Key to a happy marriage.
All right. But, I mean, to take your point about banks, and I was just having this discussion with Gautam Dugar of Motilal Oswal just a while back, and we'll get that view in for you. A lot of people are now looking at the fall in banks as an attractive opportunity to buy. So SBI is down, for example, 15% in the month of January alone, so don't lose sight of that. But I think there is a lot of caution ahead of the budget, which may be a good or bad thing. Look at what the FIIs did yesterday. This was the largest selling that we've seen in the last 7 months. So almost 7,000 crores went out in one shot in a single day. And this is the highest single day selling since June of 2022. So that, of course, draws a lot of caution back into the system. DI has bought about 5,500 crores in cash yesterday. Important to see if the Nifty holds on to yesterday's low, which was 17,400. So that's an immediate line in the sand on the downside. A couple of other things to watch. Of course, the handover from the US was on the weaker side. We get into the FOMC meeting as well. So that's another crucial trigger. But in our own cues, you have a lot of numbers that will be, that the market will be reacting to. Case in point, L&T, where the numbers look pretty good. So it was the outlook, the order book remains strong. In fact, the company said that they may exceed their ordering guidance if the current run rate continues, and will definitely meet their guidance of that 12 to 15% revenue run rate. So that's a stock to focus on, even as we head into the budget, which could be capex and manufacturing heavy. So keep an eye out on this piece. Autos come out with their numbers tomorrow. The auto sales for the month of January will be released tomorrow as well. We'll focus on names like Ashok Leyland, M&M, Maruti, TVS Motor, all expected to report good numbers this time around. So that's another focus area. Of course, the economic survey is at 12 p.m. today, and you have the Union Budget tomorrow. So the market could be in wait and watch mode. But these are a couple of pockets, right? Banks, after the recent fall, may look like attractive opportunities. You have capital goods names like L&T, and you have autos. So amidst all the chaos, maybe some pockets of value.
Well, that's right. Sonia, I wonder how the FIs are feeling. Yesterday they sold in cash market close to $800 million. And the F&O market as well was fairly bearish. And yet you had the markets ending higher. To run you through a couple of data points, institutions yesterday were net sellers. The FI net sell number was the highest that we've seen since middle of June. And yet the markets ended higher. How did that happen? Well, there was clearly a short covering bounce that did play out. The Nifty ended high with a gain of around 50 points. The open interest was lower by around 4 to around 4.5% odd. What did the FIs do in the F&O market? The short covering didn't come about because of them. They continued to pile on the short. So yesterday they added 8,000 short contracts on the long side. They unwound close to around 8,000 long contracts. That takes the short position to around 82%. We have seen in the past when they go very, very aggressive, maybe 85, 86%, that's what gives a bit of a cushion to the markets, because any spat of good news could trigger a bit of a short covering bounce. And that's the hope even this time around. On the option side, well, they bought 45,000 puts. So in case things go wrong, there is cushion on the downside. But what's heartening to see is yesterday, the calls that were written, they got unwound. And there were fresh puts that were written. Close to 22,000 put contracts were written. And on closing bell, we made this point. Even though the markets were low, the 17,500 put, it appeared that it was getting written. The range yesterday was around 91 rupees all the way to around 150 rupees. So the writing that we're seeing at those levels gives you a sense that the 17,350 to 17,400 level, that could hold out in the near term. However, if you go to around the 17,800, 17,900 mark, you're expecting a bit of a resistance, which brings us to the levels. Yesterday's low becomes important, 17,400, just keep an eye out. The Nifty Bank as well, close to 39,500. If those levels break, then you're moving to around, that 200 DMA. But my guess is the way we bounced from yesterday, the markets are telling you, giving you a message that 17,400, 17,450, the bulls are coming in to fight from there. Maybe a bit of a short covering bounce is due. Don't chase the opening, but at some point of time, you'll get a bit of a dip. And maybe if yesterday's low holds out, then you get a further bounce from here.
All right, so those are levels to watch out for, and in terms of a setup as to how to approach the market. Before we start, let me tell you what is lined up here in the first half hour of the show. We get you updates from markets across the globe. Caesar Massery of Goldman Sachs will join us to discuss the global trade setup. Later, our research team will bring you a CNBC-TV18's list of top 10 stocks for the day. At around 8:30 this morning, we do a fundamental stock check with Deepan Mehta of Elixir Equities. Stay with us.
Okay, so there's plenty coming through. In fact, we have two important market views as we kickstart trade this morning as well. On the equities front, first up, Gautam Dugar, as we were just discussing a while back, he told us that all eyes will of course be on the budget tomorrow and events surrounding the Adani Group. But he also said that PSU companies' earnings like BPCL, GAIL and Punjab National Bank are all below expectations, and the second half of the results season, which we watch closely. Gautam says that the downgrades are higher than upgrades in this results season. He also spoke about how banking stocks are now looking attractive after the recent fall, and he expects some relief for the middle class in the budget in order to boost consumption.
Well, on the equities, Sunil Thirumalai of UBS says that Nifty EPS momentum has been weak, with more than half the 50 stocks seeing cuts for F5 23 and 24, while financials are seeing upgrades. Commodities, autos, Reliance earnings are the drags. From an emerging markets perspective, Sunil says India is offering subpar growth and ROEs for still premium valuations. Thus, despite the recent underperformance and low FII holding, they do not see foreign flows rushing into the market in a hurry. Their preferred sectors include banks, consumer staples, telecom and auto.
The currency has moved in a very narrow band in the last few days ahead of the budget. So let's get you some money market views as well. We closed at 81.50 on the rupee yesterday. Bhaskar Panda of HDFC Bank says this week is quite busy for the markets as the US Fed, the ECB and the Bank of England are likely to raise rates, followed by the US jobs report. Back home, the Union Budget announcement is also due this week. Yesterday, oil prices remained a little subdued while the dollar index rallied on the risk-off mode. Given this global context, Bhaskar Panda expects the dollar-INR pair to remain tense in the range of 81.50 to 81.70 to the dollar.
Well, on bonds, we've got Bhaskar Panda, who says that yields closed higher ahead of the Union Budget, and he doesn't foresee too much upside from here. He expects the 10-year benchmark yield to trade in the range of 7.4 to 7.45 for the day.
Well, there's a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll be looking at BPCL, IFL Finance, Nippon Life, MRPL. They are stocks on the back of positive news flow. And today, we have more number of stocks we're expecting to open up in the red. L&T, Tech Mahindra, RDC, Aztec Life, Orient Electric, as well as Inox Leisure.